We'll talk about this new venture and why it probably makes sense, in your view, obviously, to take this forward at this point in time. But you have your finger on the pulse in the startup scene. I want to get your thoughts. What's happened this year? How has that changed, and what hasn't changed with startups this year?
Actually, everything has changed when it comes to startups and how we do business now. There is good and bad, but I would say that startups at this time have to think about generating revenue from day one, and that moonshot vision is now in the background of their strategy. Like I said, it's not all bad. The world has gotten a lot smaller now with business all going online. So we're getting deals brokered on Zoom. We're getting people making their first investments all online. So it's really not too bad. It's just the way that you look at it.
Right. But generally speaking, though, do you think, I mean, to begin with, it's already tough for any startup to survive the next 12 months, let alone the next 5 years from its inception. Do you think this global recession means that a lot of startups will probably go under?
I think it's a normal cycle, and this happens regardless of a recession. The recession just I guess, creates a larger impact for startups at this time. It just means that startups that were going to die are dying now at a much faster rate, but it also means that we have new opportunities for startups to start growing. We have to remember that a lot of the largest companies in the world, these billion-dollar companies, were built in the last recession. I'm talking Venmo, Twitter, WhatsApp, Pinterest, Glossier, all of these started in 2009. So really, it's startups that are building in this time of recession that is going to catch that post-recession growth that we'll inevitably see.
And we just flashed this graphic, Maxine. One of the questions you say that startups should ask themselves is what is not going to change? Has anything that's happened during this pandemic, I guess, underscored permanent changes to specific sectors you think are either underinvested or in dire need of change? Can you tell us a little bit more about the sectors that investors might worth looking at there at this point in time?
Absolutely. So investors are asking themselves two questions right now. The first one is which sectors are not going to change? And I call these the necessity sectors. We're talking F&B, local travel, healthcare, entertainment, and education. And the second question that they're asking themselves is which industries have underperformed or shown severe dysfunction in this digital age? And we have to look at healthcare and education when we're talking about these parameters. So I really believe that investors are looking at these two specific sectors, and this is where startups are going to start growing to make sure that those two sectors match up to the digital age that we're living in now, and that has been encouraged by the COVID crisis.
Now, that takes us to ProsperApp, your new company. The premise is the younger generation, millennials or Gen Z, are both not as financially prepared as, I guess, their parents and grandparents for the next crisis, and they're also financially illiterate. By what measure do you make those two statements?
Well, one of the scary statistics that I've ever read was that millennials only own 3% of the world's wealth compared to boomers who are owning 21% at the same age. Now, while this is really scary, I do believe that millennials and Gen Z are probably the most resilient and most well-equipped to kind of get ahead of the curve in a faster time period in this digital age. Yes, I think that what's happened is that the financial literacy space has not been innovated. The private and public sector are still using this type of old factory style education to teach our youth. And really what people are doing now is that they're basing everything that they're learning more on of an action-based premise. So people are saying goodbye to schools, and they're basically just Googling how to build businesses, where to make their first investments, and going from there to encourage that action-oriented but also success and failure loop that really helps people learn a lot faster. And it's really, that's how people should be learning now. We shouldn't be in classrooms. We should be getting out there and practicing what we're learning in small increments.
So where does this app come in? How does it work? Where do you see it going? What's the service now, and what's the future service you envision for this?
Yeah, thanks for asking. So like you said, ProsperApp is TikTok for financial literacy. And our goal is to teach complex financial concepts in less than 5 seconds. So it's very much video driven because we know that a picture speaks more than 1,000 words. But at the same time, what we're doing with the financial literacy space is that we're condensing the experience of our customers. And what I mean by that is that there's really no reason now that millennials or anybody really can't learn these crucial life skills like saving and investing as quickly as they are ordering an Uber. So really that's what ProsperApp is doing at the moment. And at the moment, what you're seeing with ProsperApp is the text version of this. And in the next couple of months, we're really looking forward to digitalizing this whole space. And we're particularly looking forward to helping millennials navigate this hard time right now.